Beginning, heard daily on Bible School Radio 91.3 KDKR Decatur, Dallas, Fort Worth, and on 91.3 KYJC Commerce.
Portions of KDKR's daily programming do not necessarily reflect the views of the management or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, is inflation on its way out? Today we're going to take a look. Stay tuned for Prudent Money. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Lines are open. If you want to call in, we are live today. 1-877-913-5357. 1-877-913-5357. You can also go to the website at prudentmoney.com and go check out the resources there and ask a question. Go to the Ask Bob section and send a question in, and I will get that taken care of for you. That's a way to get information, and we are going to really be adding to the resources at prudentmoney.com starting in 2023. So looking forward to that, and just making sure that we are providing a ministry of education, financial education, so that you can make better decisions with what God's given to you. And that's all at the website, www.prudentmoney.com. 1-877-913-5357 is the number to call, and I'd love to hear from you today. We do have a line open. So can you believe it, or believe it or not? How about that? Christmas is less than 2 weeks away. It's just, first of all, it's amazing how fast 2022 has gone by. I don't know if you feel the same way. I was telling somebody the other day that probably the fastest month of my life was October. It just seemed like October 1st was here, then the next thing you knew was October 31st and it was all over with. It wasn't that October was necessarily a busier month than other months or anything like that. I don't know why, it just seemed like it flew by. And then it's just all of a sudden, Christmas is sneaking up on us. And the funny thing about that is that we had an extra week because Thanksgiving was early. So generally speaking, anytime that you have that extra week, it just seems like it takes forever for Christmas to get here. And all of a sudden, here it is. I say that to say this. We can spend an enormous amount of money during Christmas. And I think a lot of times the amount of money that we do spend at Christmas is tied to disorganization. You know, it's one of those situations where you're going to a Christmas party, you got to get a gift. You don't know what you're going to get. And if you were organized, you would have a dollar limit that you're going to spend. You have an idea. You've researched it on the internet. You know exactly what you're going to buy. In fact, you may have already ordered it. But now you don't have that luxury, and you got to rush out and get something. And so this is where we kind of have a tendency to compromise when you see, oh, that'll make the perfect gift. Boy, that's $20 more than I was going to spend. You just notice the time, you notice you're running out of it. You go ahead and buy it. You spend the $20. Well, $20 may or may not be a big amount, but it adds up. So make sure that you still take this a little bit less than 2 weeks to get organized. You just don't have to go out and it's like cramming for a test. You don't have to do that. You still have some time left to make sure that you are ready and organized for Christmas. Then, how about tomorrow, John Upalo is going to be coming on the program. And, you know, John is our college admissions expert, well-known all across the country. And we're real blessed to have him on the program because he brings a unique experience to the subject of college education and probably one of the biggest investments that you will make. You know, it's interesting. One of the things we'll talk about tomorrow is that there's a study that came out that shows that tuition enrollment, let me say that enrollment is way down over the past 10 years, but yet colleges are making more money than they've ever made. How in the world is that the case? We're going to talk about that. We're also going to talk about everything that's happened. I mean, John comes on once a month. Since he has come on, the student loan forgiveness program is pretty much in shambles. So we'll get his unique insight on that. And then the fact that President Biden postponed once again he moved the date into the future again, that student loan borrowers do not have to pay their student loan payment. I just got to think that that's going to be such a difficult situation when it finally does kick in, because of this thing called inflation, which gives me a segue into what tomorrow brings. Tomorrow at 7:30 in the morning, the government will release its latest numbers on inflation. Now, Wall Street is acting as if the best case scenario is just happening. Maybe, maybe not. I like to look at history to see what history says, and history would suggest we're just getting started in this cycle. I hope that that's wrong, but that's what history would say. So they'll let us know tomorrow. And remember, the producer price index, which is at the manufacturing level, wholesale level, was a surprise last week. And so maybe tomorrow will be a surprise. You know, the up instead of down. It's been going down, and I kind of attributed that to the elections that have now come and gone. But no politician wants inflation rising into the elections. So it'll be interesting to see if mysteriously if those inflation rates go up again tomorrow. So markets really is focused in on that, but I think that the market, especially the way it turned out today, is looking at it from the standpoint of the best case scenario. And I don't know. We'll have to wait and see. I don't think it's going to go away that easily. But this is the kind of forecast that you'll see and that we'll get. And this is from the MasterCard Economics Institute. It says inflation has already peaked, but it will remain above pre-COVID levels in 2023. It says that inflation has seen its peak this year, but it will be above what we have been used to pre-pandemic next year, is what they told CNBC this morning. Now, there's tons of these forecasts out there, and they're always, especially if they've got an agenda. If you connect the agenda, you'll see that there's this one particular guy that comes on CNBC in the morning, and they interview him, and all he can do is trade stocks. So it's to his benefit if stocks go up, and he can never see a time when stocks won't go up. And there's something to being positive. I grant you that, but there's also something to being a realist and being prepared for the possibility that, hey, this is a long-term bear market cycle. But anyway, I digress. What concerns me even about that forecast, that it'll be above pre-pandemic levels, is that it's already, I think that people are kind of at their maxed out part of their budget. I think as we go in month and month out, I think Christmas is going to be a real test for the consumer. And we'll see what kind of money is being spent, because I just think that it's gotten to a point to where that extra $250 to $500, whatever the number is that we're all spending, is starting to take a toll on our finances. So to me, that's not a good case scenario that we're going to see. And this is what I've been talking about. I'm not so sure that we have seen the peak in inflation. I think we still go up a little. And I don't think we'll be too far off from that peak, but I still think we have a move up in inflation before it starts to go down. But what we don't want to see, and I've talked about this many times, is this what I call sustainability of inflation, to where we sustain this price level for a year or 2 years, whatever it may be. And if we do that, then what ends up happening is I think people kind of go past their breaking point. So that's what would concern me. It's also concerning that even though the inflation rate has been coming down, that Shadow Stats, and I've mentioned them before, they are an economic firm that takes government economic indicators and gives us the real number. They scrub through the manipulations and all the estimates and everything, and they come up with a more true number. They're saying, and this to me makes more sense, because once again, the grocery store is a great indicator for at least I think it is. Shadow Stats has the CPI, or Consumer Price Index, inflation, up 17 to 18%, not 7 to 8%. And the other thing that's a little bit concerning is that the price of oil is only at $73 to $74 a barrel. And if we start to see that come back up again, and I think that's been kind of manipulated and pushed down. But more on this when we get to the break. This is Bob Brooks. Stick around. I'll be right back.
The Word for Today is excited to announce the new official online home for the ministry of Pastor Chuck Smith and Kay Smith, PastorChuck.org. At PastorChuck.org, you'll have instant access to thousands of hours of verse-by-verse teaching by Pastor Chuck Smith from Genesis through Revelation, and full access to special messages on subjects such as prophecy and much, much more. Also at PastorChuck.org, a full library of great teachings by Kay Smith, and a section where you can read some of Pastor Chuck's books online, all free of charge. So visit the new official online home of the Word for Today and the ministry of Pastor Chuck and Kay Smith. PastorChuck.org.
Dynamic, practical, life-changing.
There's no point in going to church and not letting the Christ who gave birth to the church on the day of Pentecost change your life.
Join us each day as Pastor Paul Shepherd applies the timeless truth of Scripture to everyday life. It's Destined for Victory on this great station.
Listen daily, 3:30 p.m. on Bible School Radio 91.3.
Sometimes, when we're treated unfairly, our first instinct is to strike out and get revenge. But Tuesday on The Verdict, we'll observe how King David handled himself when he was hunted by evil King Saul, and how his faith in God and his dependence on God can inspire us today. Find out Tuesday on The Verdict.
Listen 10:30 a.m. on Bible School Radio 91.3.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. I do have a line open. If you'd like to call in, the number to call is 1-877-913-5357. I do have a line open. We'd love to hear from you, whatever's on your mind. I was talking about the sustainability of these price levels in the economy as consumers, what we're faced with today, and why this could last longer. And the reason being is that interest rates, as they raise interest rates to fight inflation, will not affect every component of inflation, because some components of inflation are not easily influenced by higher interest rates. Now, there's a lot about the inflation rate that raising interest rates will cure that part of inflation. But if you look at it, there's a good percentage of inflation that this is not going to have an effect upon. It'll just take time and more stimulus to lower the inflation rate. And there's a couple of interesting real-time things you can watch. One's the restaurant industry, and this is just my own observation. And then, of course, the one that I like to talk about is the grocery store. I think that when you see prices come down, I believe that you will automatically, because their price margins are still there, I think you'll automatically see grocery stores reflect the falling prices in food. And I don't know about you, but I'm not seeing that by any stretch right now. Restaurants, however, I think that they're going to, as an industry, they're going to get away with, even if the prices that are falling for what they use to make the meals, I think that they're going to, as a whole, fight the dramatic drop in prices back to pre-COVID levels. It's not, I mean, think about it realistically. I don't think it's going to be, Joe Smith's hamburger restaurant is not going to all of a sudden go, wow, I'm getting meat cheaper, so I'm just going to pass those savings on and I'm going to lower my prices. I think it's going to take a real shift in the supply and demand. And that's in the supply and demand, the demand for hamburgers, the supply of customers to buy hamburgers. That already has taken its toll on the restaurant business, with so many restaurants going out of business because of COVID. I mean, COVID thinned out the supply of restaurants because of bankruptcies and just really going out of business more than anything else. So I don't think it's going to be until the supply is there by restaurants and the demand is not. And the demand, people start buying food at the grocery store and preparing meals because it's cheaper. And they have to because of the probable inflation, recession that, well, we'll talk about that here in a minute, that is quote unquote heading this way. I've never seen, in 30 years of doing this, I've never come across a situation where a recession was so telegraphed. And it's just almost like here comes the ice storm. You can see it on the radar. It's coming. I don't know. Something doesn't mix well with me right on that, but we'll talk about that here in a minute. So I think once you start to see demand to where the average consumer is not going to pay $10 for a hamburger, they're going to pay $7 or $8 for a hamburger. And, built in there is like a 20% price increase or so, somewhere around there. So it'll be interesting to see what restaurants do, what grocery stores do when it starts to level off, certainly hoping that it will. This is Bob Brooks, and you are listening to the Prudent Money Radio Show, 1-877-913-5357. I do have a line open, and I would love to hear from you. I'm tinkering with an idea starting in January called 401k Watch. And I would welcome your comments, your opinions as to what I could put together on a weekly basis that would help you with your 401k plan. Because I think that we are going to enter into a unique time as far as investing goes back into the 401k plan. Really, for the past couple of years, the traditional way of managing and investing for 401k investing in 401k plans is really taking a turn for the worst. Used to, you could put your money in the traditional 60-40 mix and have a risk level that you could live with. Today, with both bonds and stocks losing money, I think that it's tough. I mean, you're losing money, and it's really a tough scenario to get it into a mix and the right types of funds, which all 401ks don't have the right types of funds. By getting into a mix to where it reduces that risk. I mean, you almost have to have a short duration bond fund or a stable value bond fund or a money market that's actually paying 2.5% to 3%, and have that on the majority. And I'm not making this a recommendation, I'm just giving an example. Make this the majority into that bond mix, because the short duration bonds are not as affected by interest rates, and get that to work for you. But what I'm finding, though, is that the average investor who invests in bonds has not become aware of the amount of money they've lost really until just recently. I guess it's one of those things, they just assume that bonds have always made money, they'll continue to make money, and everything's okay, so I don't have to look at my statement, which is not a good strategy, but I guess it is a strategy. I believe that when this bear market is all over with, we will see and have gone through problems and how big or what type and all that kind of thing is yet to be seen. But we go through at the bond market type situation that bonds lose a lot of money, which even today, bonds have never lost the amount of money that they're losing. I looked at a Vanguard Total Bond Index Fund, and that fund invests in a broad spectrum of bonds. I think it's a good, healthy way to invest into the bond market. And that one was down 11% year to date. I mean, that's horrific for a bond loss. I mean, typically you don't get that. So my question is, once this is said and done, once we get out of this where we're stuck, will investors ever come back? Traditional investors come back to bonds. Because when you get burned like that, you lose a lot of money. And to bond investors, 10% is a lot of money. You tend not to go back into it. And what I want to suggest is probably the greatest buying opportunity for bonds and maybe even stocks will be on the tail end of this bear market that's really hitting all markets, and it will be a great buying opportunity. What I like about that is that with bonds, the higher potential returns with the less risk component, because you clear out, you detoxify the bond market through losses, and then when it rebounds, there can be some really good risk-adjusted type investing. But most people will not think of bonds. They'll be turned off by bonds, and that's what happens at the end of a bear market. But then again, they'll look at stocks. They may probably be turned off by stocks too because of losses if this historically plays out like it's supposed to. But I don't believe ever that we've seen a scenario where bonds and stocks have put in big bear markets at the same time. just don't believe that that's ever been the case, at least that I've come across. So, it's about bonds or debt. This is really, I think, will be a story of debt, that the debt cycle has peaked, the debt bubble has peaked, and it starts coming undone. It'll hit the bear market, and losses will be allowed to occur, which has kind of been the problem because politicians have pushed things off to the future, causing losses not to happen. Anyway, that's a whole other story. We will see. Once again, though, I think it'll be a great buying opportunity at some point. Well, this is Bob Brooks. You got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.